Hi, I'm Jimmy Lepping, psychologist and statistician, and in this video I give a helicopter tour through 10 different sectors in European stock markets using stock performance in the past year from a total of 112 Amsterdam listed stocks, some of which are also listed on other stock exchanges. These stocks are from 4 different Amsterdam listings: large cap AEX, mid cap AMX, small cap ASCX, and the local listing. So it represents companies from large to small from a variety of sectors and together including uptrends, downtrends, and sideways trajectories. Here are the 10 sectors that I've included in this study. I've used the sector categorization that is used by Yahoo Finance, which is also the source where I got all the stock performance data from. Yahoo Finance does not provide the kind of sector performance that I'm presenting here, but this is something that I calculate myself in programs like R, Jamovi, and Excel. An 11th sector that I could have added would have been utilities, but since there are only a few companies in the Dutch listings that are classified primarily as utilities companies, I have not included this sector in this overview. One of the reasons for showing this overview is to help you appreciate that when we compare sectors, it is not only a question of which sectors have on average done relatively well and which ones have not, but it is equally important to consider the spread or variation within each sector. For example, there have been narratives throughout this year in some places that technology has been performing very well in 2023 year to date. However, it really depends on which industry within the technology sector you look at. In the range of favorable performance, we find the semiconductor companies, which can be seen as one industry within technology, whereas in the industry of software infrastructure, we have 3 companies that are down 40 to 60% compared to a year ago. One final comment before moving to the next chart is that all the charts provided in this video have taken dividend into account. Here we see the same picture of central tendency and variation within each of the 10 sectors. So as a sector, we see that energy, for instance, has done fairly well, with only one of the companies being slightly in the red compared to a year ago. Whereas in the basic materials or materials sector here, we see very little gain, but some examples of very strong losses. Overall, consumer staples, which include Ahold Delhaize, Unilever, and Sligro, have as a sector done relatively better than the more cyclical consumer discretionary sector, which for instance includes companies like Just Eat Takeaway. Although it might be a bit extreme to say that consumer staples are not cyclical at all, since they offer many products that are almost constantly in demand, they tend to be less cyclical than consumer discretionary stocks, which are from companies that may offer many products and or services that are useful but are not always necessary and can therefore be skipped more easily for a while when people feel they need the money for more urgent things. And perhaps we are finding ourselves in these times right now, with people having drained much of their savings from previous years, and as a consequence now making choices to perhaps postpone certain discretionary expenses. But again, the chart shows that it is perfectly possible to find a consumer staple stock which has performed worse than a relatively better performing consumer discretionary stock. There is considerable variation within each of the sectors. Therefore, we are now going to have a look at a few industries within some of these sectors to see how they have performed in the course of the past year. To start with banks. Of course, we remember that bank stocks had a nice run up until sometime in the first half of March, when all the Silicon Valley Bank mess happened, and many banks took a hit even though they had little or nothing in common with Silicon Valley Bank or other banks that operate in a similar way. And then there was a recovery, but in the last few months we have seen a downward trend, pretty much like in many other industries in the stock market. It still seems that we are in a downtrend because we see consecutive lower lows and lower highs, although last week we saw more move up, and if this upward move persists until we pass the recent lower high, then we may see a first signal of a possible reversal in trend. Next, insurance. This one was dragged down in the same time in March when bank stocks took a hit, and the latest move down is strongly influenced by fairly strong drops in two insurance companies in the Dutch large cap index. Energy had a nice run up, then moved into a downtrend, and right now it remains to be seen if the upward moment from recent weeks can reach and preferably pass the previous high, or we see another test at the most recent low again. Next, a pretty similar story for the semiconductors, which had moved into a downtrend recently, but last couple of weeks we saw some nice moves up and we are now not far from recent highs. Again, as for energy, if we fail to pass that recent high, we may see another test of the most recent low. Here, construction and engineering, which seems to be going somewhat sideways. We have seen a lower high, but also higher lows. So let's see if this breaks out on either side at some point. We are currently near the recent highs. So if we pass this one, we are more back to a situation of both higher lows and higher highs, which could indicate a new uptrend. Specialty chemicals, one of the industries in the materials or basic materials sector, which we already saw in the beginning of this video, has been one of the relatively worst performing sectors in this past year until the end of last week. And we see that specialty chemicals continues to be an industry of losses with no clear sign yet of a reversal in this very clear downtrend. And we find a similar picture for steel, another industry in the basic materials sector, which also remains in a pattern of lower highs and lower lows, going in an almost straight line down. Note that these patterns should by no means be extrapolated in the sense that a trend like this means that another 10 or 20% or whatever other percentage down is in the cards. Both fundamentals and sentiment can change in expected and unexpected ways and can change fast sometimes. And perhaps looking back in a few weeks, we may see that the trend has changed. So to conclude, when thinking in terms of relatively good or relatively poor performing stocks of different sectors, it is important to not only look at central tendencies in sectors, but equally appreciate the variation within sectors, for instance via the performance of smaller groups of stocks that can be grouped in terms of industries and tend to be more correlated in their trajectories over time. Okay, that's it for this video. I hope you find this useful, and if you have any ideas or suggestions for future videos, you can leave a comment below this video or just drop an email at the email address I have shared below this video. Have a good day and see you soon.